we've been following what a Chinese feed buyer would have to pay for U.S. soybeans, FOB at the Gulf, and FOB at Brazil's port. We've thrown PNW in here as well, but let me say that it's very difficult to get a PNW bid, Pacific Northwest bid. So we had to make some assumptions to make this chart because there's simply no soybeans moving to the PNW. The rail isn't hauling soybeans there because there's no Chinese business. You can get a bid for November, suggesting that maybe there's a little optimism that once the midterm elections are over, maybe we'll see Chinese buyers brave enough to start buying soybeans from the PNW. But the bottom line, as this graph shows over here on the right-hand side, is that U.S. soybeans are cheaper than Brazilian sources now. They're cheaper both at the Gulf and the PNW. Well, particularly at the Gulf, they're cheaper. Excuse me. Yes, we're cheaper now than what we were, than what Brazilian soybeans are. And that should attract some interest. That the problem is feed buyers in China are telling us that they're pretty scared of buying U.S. soybeans at this time. They don't want to upset government officials, and so they're doing what they can to find what they can elsewhere outside the United States. This price differential, therefore, has resulted in some U.S. of aggressive buying of Argentine and Brazilian soybeans. So crushing plants in Brazil and Argentina worried about not having enough soybeans are looking at the U.S. market to buy soybeans. It's already happening in Argentina. Could be anywhere from 60 to 75 million bushels of U.S. soybeans go to Argentina. It doesn't quite pencil out in Brazil yet because of their high freight rates, but there's some thinking we could see 35 to 40 million bushels of U.S. soybeans go to Brazil to their crushers as well.